Everyone. Good morning, everyone, and happy Thursday, April 17th. It's so good to see you all on this Thursday. Not really used to doing these Thursday sessions, so I'm so excited to have you all here on with me on this Thursday. See who else joined the room. We've got Diane, good to see you. Hey, Dan, good to have you here as well. So as you'll notice, this session is structured a little bit differently from what we're used to. What you might notice is in the bottom left-hand corner of your screen, you should see a green pencil icon. What that'll do is it'll give you the ability to draw on the screen. I wanted to implement this tool to show you what to expect during next week's bull market boot camp. It's going to be a 3-day boot camp where we go over the top strategies that I'm going to be teaching to maneuver the bull markets. So as we start off our session, welcome again to the complimentary bull market showcase. We're experiencing a lot of volatility in the markets over the past few weeks with what's going on politically. The markets are taking some pretty big moves, both to the upside and to the downside. So I'm going to show you the tools of what to use. There's going to be specifically 3 things that I pay attention to when I'm trying to maneuver these markets. Top 3 things that we need to know. So you'll be learning my tools to buying and selling in the markets today. So why that matters is that we want to pay attention to today's markets, what's happened weeks ago, months ago. Things are different now than they were back then. So we need to pay attention to what's going on today and how we can trade these markets more confidently. So learn what to expect in these volatile markets using my top trading strategies. Again, bottom left corner, if you see that green pencil icon, once you click on it, it should bring up a panel that gives you the opportunity to click on a pencil, to text on the screen. And again, these tools are going to be implemented during the upcoming 3-day event. So you can see, I think Patrick's is here. Someone drew something else earlier. So kind of play around with that. If you're having any issues or not able to see it, just let me know. But if you wouldn't mind, and if you've been in these sessions before, just draw on the screen. There you go. Thanks, Dwayne, Randy. So you can see these capabilities help students to be able to answer the questions and the chart examples real time. Nice. Great job, guys. Pretty easy, right? All right. Nice job, Jimmy. Excellent. So that's a new feature. I haven't done that in the showcases before, but just to show you some of the new tools that we'll be using during the boot camp. All right, let's get into it. So to start our session today, let's do a look back at what happened last week. So last week, how we ended off our last showcase was the markets were down. We were down about 5%, which is a pretty big swing for us in the markets. But it's not so common nowadays. We're seeing these swings to the upside and to the downside. So last week, we ended off the week being down 5%. Hey, Michael, to be able to use the edit feature, yeah, it should just be a button in the bottom left corner, a pencil icon. If you're not seeing it, you can send me an email and I can help you get it set up. Oh, if you want it off, so click on that pencil icon again, and then on your toolbar, you'll just hit the top button. It says mouse, and then that should turn it off. It'll be the very top option. Yeah, try to find that. Thanks, Michael. Yeah, if you're still kind of drawing, just click on that pencil icon again, and it'll be the first option on your toolbar. All right, so last week we ended off pretty volatile, down 5%. As we come into this week, and I know it's Thursday, so we're still early in the week, but we've already had some pretty big moves to the upside and to the downside if you're paying attention each day. So from Sunday into Monday, we were seeing that rally continue from the evening session into Monday, and the markets ended up 6% from those past couple days from the end of last week into Monday. So markets were up 6%. Everyone was very bullish. We were looking for those long trade opportunities. Now comes Monday through Wednesday, we had a drop that took us down another 5%. So I don't know about you guys, but these rallies and drops can be pretty significant. And as far as trading's concerned, it can be kind of challenging trying to get into these moves. So the goal is to be able to take this information, really put the numbers to the side and understand how to trade the markets confidently. There's going to again be three different tools that we're going to use that we can maneuver the markets with. Nice. 5260? Where are we at now on the S&P? We are at, let me bring up my charts. 5322. Nice job, Michael. So yeah, you can see we're up in the markets, we're down in the markets. If I come over to what's going on real time, I think we are rallying a little bit. Not too much. We're trying to rally, but we're struggling. So the reason why we're struggling is going to be the information up here that's showing us that we're getting this turn in the markets. We had a nice 2-candle flip at the top of the move. That's helping us move down. Nice. Yeah, always good to lock in some of those profits. So in order to maneuver these markets, as I mentioned, we're moving up, 5%, and then the next day down 5%. How can we maneuver the markets? So learn how to trade smarter. That means being able to understand what strategies we should be looking at. There's going to be 3 strategies and being able to choose the best strategy. So by the end of the three-day event that we're going to have next week, the Bull Market Bootcamp, there's going to be taught 3 strategies, and you can choose the best strategy, which one works for you, but you're going to learn all of them. The smartest traders here and being able to trade smarter means being able to master all 3 of them. So that's going to be the goal, is to be able to teach you all 3 and choose the best strategy that works given the market conditions for that day. Because some strategies work on some days, but they don't work across the board. So we got to be able to learn all 3 and be able to master all of them to decide which one works in which market environment. So strategy number 1 is going to be zone trades. Qualify the best zones to buy low and sell high. So we know what zones are, right? Zones are where we like to, when we're looking for a buy zone or a demand zone, we're looking to buy on a pullback. When the markets are rallying, we look to sell in a supply zone or sell zone. So zones are a pretty foundational piece of how we trade. We need to be able to understand which zones work and which ones don't. So quiz question for you guys. I've got 2 charts here. This is going to be a new one. So if you were here on our last Friday session, it's going to be different. But 2 examples here. Chart example A. Both of these are the S&P 500 on the daily time frame. A shows a 2-candle flip zone, and B shows a 2-candle flip zone. Now, which zone would you buy? Would it be choice A, or would it be choice B? Okay, we've got 1 for A, we've got 1 for B. Not seeing the chart? Everyone else can see it, right? I'm seeing people answer. Let's see, Mike. I'm not sure. Not seeing. What do you see, Mike? Should be choice A, choice B. If your Zoom might be in the way. But yeah, if you click on the Zoom on your screen, that might be able to open it back up. All right, so we've got a couple for A, a couple for B. Oh, let me try that. Thanks, Mike. Turn that off. Let's see if that helps. Any better? All right, so I'd say we're kind of 50-50 split here. Let's see. Okay, and I'm changing some settings. Thank you, Dan. Appreciate that. All right. So I'd say we're pretty much 50-50 split. Both of them are two candle flips, which I'll be teaching during the event. But which one are we going to be taking? So we've got someone showing some extra support to the left. We've got a two candle flip. Price coming back down. Are we looking to buy here? Or are we looking to buy in this one? So the answer is, oh, let me see. Scott says I want to say B, but the close is weak. Sure. Now, a lot of us are focusing in on A, and I understand why, because we can gather a lot of the information to the left, there's a lot of wicks down here, there's support, we have a nice zone that price is coming back down to. We're in an uptrend. B, we don't really have all that information. Now, if I show what the answer is, the answer is B. So we're going to be learning about this during the bull market showcase, but it's really the foundation for understanding which zones we want to take. The main thing in that you'll see is going to be a common theme for which zones we're trading is that a lot of traders tend to choose zones that they marked up on their charts from days ago, weeks ago, and they think that because they put in all the time to find their zones, they leave them on their charts and then they choose those zones when price returns to them. The problem is that those zones were formed maybe days ago, weeks ago, that by the time price returns to those zones, it tends to not be as strong of an opportunity because of the change in markets. So we want to keep that in mind as strategy number one. If we're choosing which zones to buy, we need to make sure that we're choosing the best ones. Yeah, A, also middle of the curve. But even more so than that is that if we're looking left for our zones, even if we chose a zone higher up, we'd be getting stopped out on the whole way down. So how many times has that happened to us where we've picked out a good zone, prices come back to it, and price continues moving lower? So if that's the case, then we're trying to, in essence, pick a bottom as the markets are coming down. So I'm going to show you the strategy to help us avoid picking bottoms moving forward. All right, another quiz question. So which one of these zones would you trade? Zone A on the left is going to be the Dow, this one, or B? Which one would you look to go long? Would you go long on A or would you go long on B? I have a feeling we might get more correct answers this time. So if you were part of the last showcase, you may remember the answer to it, but it's still a good refresher anyways. Which zone would you buy? So one is going to be a buy opportunity. One of them is not going to be a successful buy opportunity. That's fine. Yeah, this is a good one because if you were in the last showcase, a lot of us got it wrong, but that's okay. All right, I appreciate you guys for answering. So, yeah, seeing a lot more correct answers this time. The answer is A. So, if I went back to last Friday, a lot of us were choosing B because it meets the criteria of a zone. So when we're looking at a zone, a lot of us say, well, we want to look for a certain price pattern, like a drop-based rally. It needs to have a strong move away. It needs to come into a prior zone. All those things that qualify what a zone is. The issue with that is that even if you have all those odds enhancers to say, this is a strong zone, strong move away, it broke out, it's in another zone, even if you do all that, and you go with maybe what you learned previously about zones and you qualify them and you find you're still getting stopped out, the reason being is because chances are you're choosing too old of zones. And it's not something that they really teach, but it's something that I want to bring to light more during the upcoming bull market boot camp next week. So the one key signal to buy and sell So I'll teach you which zones to look for and which ones not to look for. And then I wanted to give you a hint is that not all two candle flips are the same. Some of them are going to be higher probability on these pullbacks when to buy, and other ones are going to be riskier. So we're going to be learning it all during the upcoming 3-day bull market boot camp. All right, so that's strategy number one is being able to identify the best zones to buy low and sell high, and understand which ones are going to be elevated risk. So during certain market conditions, we want to be trading zones. In other market conditions, we want to be trading breakout trades. So breakouts are ways that we can get in on big moves after a reversal pattern. Now, just as a refresher, how many of you guys take breakout trades? How many of you guys, I would say, often take breakout trades? Okay, a little bit mixed, a couple yeses, a couple no's. And what's the reason for not taking breakout trades? What? Okay. Yeah. Look to confirm. The issue that I see a lot of students have with breakout trades, so breakouts are ways that get us in on those momentum moves. So if we're seeing price rallying and we want to maybe participate in that rally, we can take a breakout, which is buying as the markets are moving higher. The alternative is as the markets are dropping, selling as the markets are moving down. So there are ways that we can get in on big moves after a reversal pattern. Tendency on pullback and get stopped out. Okay. So yeah, there's all these issues that us traders run into when we're looking to take breakout trades. And I've seen it time and time again is that the reason why traders tend to avoid breakout trades is because they say that they're taking a breakout and it tends to go against us too much and stop us out. So another quiz question. We've got an example on A over here, which is Canadian dollar, 1 hour time frame. Would you look to take a breakout here, which means buying as the markets break out to the upside in that red rectangle? Or would you buy as the markets rally through B, this red rectangle? Which breakout trade would you buy? Would it be choice A, buying on this breakout, or B, buying on this breakout? A lot of B's. Gotta check back who was here last session though. Yeah, if you're new, kind of take these quizzes and see what your thoughts are. Don't know, it would be a longer move. Right, and so that's a good comment. So a lot of us look at A and we see these touches here and we see resistance, 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 and we're rallying that we think, okay, price has been tested here once, twice, three, four times. I'm going to take a breakout and it's going to go to the moon. Whereas on B, we really just have kind of one, two touches in here. There's not as many touches. So in the past, what I've heard students do is that they base it on the number of touches. For example, if price has touched a resistance area at least 3 times, they'll take a breakout. Now, the issue with that is that that can get us in on breakout trades that end up failing. Why? Because we're not getting in at a good location. Buying here on this breakout worked for a little bit, but then it moved against us very quickly. Whereas B had a strong breakout and didn't go against us at all. So what I'm going to be doing during the upcoming 3-day bull market boot camp is being able to teach you guys the difference between the two charts, which breakouts give us that long running move, which was actually B that gave us the longer running move versus A broke out a little bit and then came against us. Does anyone want to take a guess as why B was the correct answer and why was A incorrect? Why was B the breakout that had the longer running move? There you go. You bet. Can you guys see Dan's answer? So when we're looking at B, so it's not as much about time frames here because this could be any time frame. Whether it's I know I have these different time frames, 15-minute versus 1 hour, but I did this in the last session. You really don't need to pay attention to time frame as much. More as it is just about the picture on the price charts. So if I'm looking at picture B, notice the proximity to the zone. So that goes back to strategy one is how do we identify what a zone is? Well, the zone in B is going to be our 2-candle flip, which is right here. Notice we have a red candle, green candle. So if you're new to these classes, that's how we'll identify what a zone is. And it had a breakout to the upside. So as price is coming back down to that zone, when we're taking a breakout, it's not going to be based on how many touches price has occurred in that area. Instead, it's going to be about how close it is to the zone and getting in on that momentum move to the upside. Whereas A, it's rallying, but our zone is actually going to be down here. So if I'm trying to take a breakout trade, I don't want to take a breakout trade here because the issue is what we see on the next slide is that price can come against us pretty easily. If we're getting into a trade right after that zone is formed, that's going to get us into a longer running trade much faster. Also notice how much time has passed. We're talking about time more and more, but after price broke out here, that took how many hours since price had formed that zone? Many hours. Versus this one was a immediate pullback to that zone. So that gave us a stronger push to the upside. So again, comparing the two, if we want to find these strong breakouts, we need to be able to understand where we are in proximity to our zones. That's going to be key. And the last strategy, which is a new one and based on a lot of your guys' requests, I'm getting a lot of emails on option strategies that many of you guys are interested in them. So keep in mind from the emails I'm seeing, the option strategies that I'm going to be teaching are for beginners as well. It's a simplified strategy to being able to take advantage of the markets when they're having these drastic moves to the upside and to the downside. So strategy number 3 is going to be options. High volatility means big premiums. In other words, when the markets are up 5%, when they're down 5%, those options premiums get inflated a lot, meaning that if we sell options, then we can collect a lot of premium when the markets are moving as much as they are these past couple weeks. So the great thing about options is that we can collect big premiums and you don't need to be specific with your zones. Now, for everyone in the chat, how many of you guys trade options? Or if you don't, how many of you are interested in trading options? Either how many of you trade options or how many of you are interested in options? All right, so a good mix. Yeah, Dan does. I see interested, sometimes buy puts. All right, so with buying puts now, we got to be careful because if we're buying puts, we're paying to buy that option. But with how volatile the markets are these days, where we're seeing these moves up and down, 5% down percent, those premiums are so inflated that we can often sell them at these inflated prices. And then when the markets calm down, we can close out of our positions in a shorter amount of time. So I'm going to be showing you that strategy. Be it buying puts, buying calls, those are good as well. Nice. Check does sometimes. Yes. So I'm seeing a lot of people that are emailing me that are interested or they want to learn, maybe don't trade them. So again, this is going to be for those of us who haven't traded options before, that you'll be able to learn how to use them. You don't need any prior experience because it's going to be a simplified strategy that takes advantage of how to trade them during these volatile market conditions. And I'll give you the step-by-step look on how to trade them. You're going to be in for a treat with this one. So strategy number 3, options. So if we're looking at 2 charts, which chart is best to sell out of the money call options? Choice A on the left, we're looking at gold, weekly time frame. B, we're looking at natural gas, weekly time frame. So if you're looking at the two, and take a moment to think about what this means, which chart would be best for selling out of the money call options? Hmm. Okay, Diane's saying B, and I see the rest are 1, 2, 3, 4, 5 A's. So a call option, if we want to sell it, we're going to be selling at a price that's higher than current price. So current price on gold right now would be here. That would be this candle. So selling an out of the money call option would be selling a call option, for example, up here, maybe above that high. On natural gas, current price is here. Selling an out of the money call option would be, for example, selling a call up here. So let me ask you guys, which one could you likely sell a call option and have it not get triggered? Because we want to be able to sell, but if price ends up hitting that strike price of our option, then we're going to take a loss on the trade. So we want to sell a call option when we're anticipating price to not return there. We want to sell it and then for that option to expire. So which one do you think price isn't going to return to those highs? Is A going to hit this line or is B going to hit this line? Is it more bearish? Let's see what the answer is. All right. So the answer is B in this case. We'll talk about expirations and strike prices and all that. But yeah, if we're looking at the two, if we sold that call option on A and we sold it here, notice that where we were located was that we were near a prior buy zone, which is this pivot down here. So if I'm selling a call option, it's better to sell a call option when the markets are rallying. On choice A, the markets were moving down. So call options are going to be, they're not going to have as much premium because the markets are moving down. At this point, put options are actually going to have more premium because the markets are dropping. B, on the other hand, that most recent weekly candle is up. That means call options are going to have more premium. So we want to look at what's going on again real time and saying, what's the current move that the markets are seeing? I would say when we're looking at A, A is moving down, put options are going to be higher premium. Versus B, we're moving up, call options are going to be higher premium. So I'm going to start focusing my attention on B for the call options based on that rally. The other nice odds enhancer is what we've got on the other side. And B, Jimmy hit the nail on the head on that one. B, we've got our two candle flip on the top side, actually. So if we're looking at the two, can you see on the top side we had a two candle flip that is actually already working its way down. Green and red, and that two candle flip broke down. Location-wise, can anyone mark on the chart why this was a good location for a two candle flip to go short? So why did natural gas continue to move lower? That's our two candle flip because it's our green and red. Can anyone draw that piece of information on here that led to it being a longer running move down? Nice, Dwayne. Zone was formed, fake out, breakout. Who can point to where that fake out, breakout is? There is resistance holding. Yeah, it's going to be where Dwayne is putting his circle, because that's showing us if I take his circle and extend it to show where there was resistance. That's where resistance was hitting many times. We broke out to the upside, and then we came back down. Now that's our reversal pattern, and that says look to go short. So in combining the two, if we're comparing choice A and B, maybe you got this one wrong, but on A, we want to look at what's going on, again, real time. Real time, the markets are dropping. We would want to look for selling put options. If the markets are rallying, we want to sell call options because those are the ones that are inflated more. So in learning how to trade smarter, we need to be able to choose the best strategy. Now, that doesn't mean take the strategy that works for you and forget about the other two strategies. Like, I'm only going to trade zones and I'm going to forget about options and I'm going to forget about breakouts. That's not what this means. It means choose the best strategy in the market conditions that you're seeing today. So, either taking a zone trade, maybe we have a zone that just formed. We want to look to take that zone. Maybe we have an area where there's a high probability for a breakout. We'll take that. Or maybe the markets are volatile. It's not a good idea to take zones or breakouts. We should be trading options. So the point of the upcoming 3-day bull market boot camp is really to take advantage of everything that's going on in the markets. Now, currently, for example, the S&P is up 0.2%. If I'm looking to sell options, I want to do it on days when the markets are dropping or the markets are rallying these big amounts. But if the markets are up 0.25%, you guys tell me, are the premiums going to be high today or are they going to be low? What do you think? If the markets are up 0.28%, are the premiums on the options going to be high or are they going to be low? So option premiums are going to be high when everyone's fearful or scared. The markets are having crazy moves. When the markets are calm, the premiums are lower. Yeah, nice job, Scott, Dwayne, Dan. Yeah, premiums are going to be lower. So if I'm looking at my strategy grid, well, probably not a great day to do options. So I'll take that one off for today. But we need to consider it in terms of the bigger picture. So that leaves strategy number 1 and strategy number 2. Do we want to take a zone or do we want to take a breakout? Well, let's come back to our charts and see what's going on today. All right, so we're trying to rally a little bit. Now, where is our nearest zone? Can anyone put a circle on our nearest zone? Which zone is the most current to price? There we go. Great job, Dwayne, Jimmy, you bet. So the most recent zone is that we had this green candle coming up, red candle coming down. That's the definition of our two candle flip. That would be a
Nope,
zone. And in this case, we'd be looking
nope.
for a short trade. So I'll mark that zone. So as
Randy
price,
Wood, 11/24/59.
all right, so as price comes back to that zone, we're going to be looking for a short trade opportunity to take us back to the downside. So that zone, we had a breakout. As price comes back to it, we're looking for a short trade. From there, we'll come down to the smaller time frames. Let's drop it down to a 4-hour and look for that zone. Actually, let me come down to a 1-hour time frame. So when we're looking for a quality zone, we want to bring in the odds enhancers that we look for in determining what qualifies a zone. Now, there's a bunch of them that we look at, but what criteria do we look for when choosing a zone? I know many of you guys know a bunch of them, or even if it's from previous classes, but what do we look for when we're deciding where to place a zone? What do we want to look for? What's some of the criteria? So how am I going to find my zone in here? All right, thank you, Jimmy. So how quick did it leave? So I can see price had a pretty fast move down here from this point to this point. So price left this area quickly. And at the origin, we have a two candle flip. So we have a green candle coming up, red candle closing within the range of the green candle. That's our two candle flip. How quickly did it leave? I'd say it left pretty quickly, left that area, and price never returned back to it. So here's the zone that I would want to look at right now. Dan said double-sided breakout. Absolutely. So that's when price breaks out to the upside. Did we have an upside breakout? And then was that followed by a breakout to the downside? So notice that we broke out to the upside and then we broke that support. That led to a longer running move. Any other odds enhancers that you can think of? So how quickly did it move? Double-sided breakout. What else? Wiki, absolutely. Nice job, Dwayne. So we want to see, is it wiki where the zone is or in a wiki area? And I would take all these wicks up to the left to show that, yeah, there's a lot of selling pressure. You can see all these wicks over here. It's touching, touching, touching. A lot of selling pressure. So that's going to be a nice place for a zone. Excellent. Is it in a prior zone? You bet. So we look left again. We've got a two candle flip over here. Green and red. Broke down. Price returned to it. How long did it stay at that area? Absolutely. So price rallied up, left, didn't really stay that long. So it rallied and quickly reversed, had that nice reversal pattern. So all of those criteria, as we put it together, are telling us that this is a good zone to be looking at. Now, what you'll do during the upcoming 3-day boot camp is be able to identify these best trade opportunities, just like how we're doing it now. There's going to be a new tool that I'm incorporating during the boot camp to help you build your confidence with the zones. So when we're choosing a zone to take, and down here we have a two candle flip, you can see that that's where price recently dropped into and we're rallying from. Or this two candle flip up here, this is where price stopped over on the right-hand side and came down. So this is a zone that worked. This is a zone that worked. What did they have in common that wasn't mentioned in the chat? And there's going to be a new odds enhancer I'm bringing in, and that's going to be when we're looking at the breakout, how strong was the breakout? Now, strength can mean different things to different people, but when I'm looking at strength, a new piece of information is looking at pivot points. So what I want to do is I want to see that that zone can break through a prior pivot point. So this two candle flip, notice that that zone broke above that prior controlling breakout pivot. You can use that as well. Did it break through a prior controlling breakout pivot, a prior zone? If the answer is yes, that's going to make that zone much stronger. Just like this one, if I'm drawing my pivots out, notice this zone broke the pivot to the left. So then my eyes are going to gravitate towards this zone for a short trade opportunity. If I clear off my chart, and I said, oh, hold on. Maybe I was looking at this zone over here and price rallied. With this zone, did this zone break the prior pivot? Pivot here, we came down. But notice that this zone did not break through. Yeah, it didn't, right? All right, so again, this is new. Nice job, guys. It didn't break that prior pivot. So from a strength perspective, if I'm trying to anticipate how strong this zone is, well, it really didn't break through anything. And it might have the picture of a two candle flip, a wick over wick reversal, fake out, breakout. It can have all that criteria. But if we're missing that piece of information that it didn't break through a prior pivot, strength perspective is going to be lacking. And it did work once, it looked like, but then price gapped down through it. So what we really need to understand is, did price break a prior pivot point? If the answer is yes, then we're going to use that as a stronger odds enhancer. Again, that goes back to, why is price stopping here? Well, this zone broke through a prior pivot. That makes that a stronger zone. So again, this upcoming 3-day bull market boot camp that we're having, there's going to be new information, and we're going to be doing our best to simplify it. Trading smarter means being able to identify zones. Which ones are the best zones to take? Basically, which ones have the criteria, and we're going to be bringing in some new information to help us qualify them. With our breakout trades, we want to say which breakouts are going to be longer running versus which breakouts are going to be shorter lived. And there's very specific price patterns. We'll go into the details on this as far as which breakouts have those long running moves and which ones are shorter lived. And then options trades for when the markets are volatile. They're a great tool because you don't need to be specific with your zones. On markets like today, though, if we're just up half a percentage, that's not really that crazy. Options, I would say, are best on the days when the markets, you see it on the news, and we're saying, the markets are crashing, we're down 2%, or markets are rallying up 5%. Those are the days when selling options can typically get us a lot of premium. So, in all my coaching and trading and teaching and just being in the markets, the number one reason why traders fail. What would you guys say the number one reason why traders fail is? And it ties into this picture here of, well, here's a good zone. It's a two candle flip. It had a breakout. It gapped up. You could say that's a drop-based rally. It had a strong move away. It spent little time at the zone. It left pretty quickly. You can have a million different odds enhancers that say, use this as a zone. There we go. Let's see what you guys say. Nice job, Randy, Dwayne. Looking too far back, and again, these are probably all going to be the reasons why traders fail. Looking too far back, lack of education, absolutely. I think that's also kind of the number one reason is because the education that we have doesn't really teach us what to look for correctly. I don't know about you guys, but when I started learning how to trade, I was taught to look for zones that met certain criteria, that met something like a drop-based rally, or maybe a rally-based rally. And what I found is that a lot of these zones, when I would take them, is that I would get stopped out and price would go through those zones. And I would be frustrated because I chose the zones that had all the criteria and it met what they were saying, but I would still get stopped out and they would have reasons why the markets didn't respect those zones. Time and time again, I was choosing zones that were getting stopped out. So I wanted to figure out why that was the case. So lack of education, absolutely, not knowing really what to look for in trading and looking too far back. So Randy said it, Dwayne said it, looking too far away. Stubborn using a bias. Yeah, that's a big one too, Michael. Using a bias instead of adapting. You bet. Yeah, we don't want to stick to our bias and think we're right. We want to follow the markets real time. Missing context. You bet. So we want to see what's going on with the markets, but in bringing in all this information, I would say the number one reason is that traders are looking too far left. I would say whenever I've coached students, they come into my coaching sessions and they bring in charts and they have zones marked. They say, here was the zone I took, here's why I took it. It got stopped out. And the reason why is because they're looking too far left. They're also keeping zones on their charts that they marked up from earlier in this week or weeks ago. And that's why it's important to, as the solution, only trade what's going on today. So, why that's important is because the markets can change dramatically day to day. So, if we're trading a zone from a week ago, but since then we have new updates on tariffs, there's new market conditions, we're in a corrective phase now. We don't want to trade zones that have nothing to do with what's going on today. So I'm going to be incorporating a step-by-step system for trading in these volatile markets. This event is coming up next week. I've already had many of you guys get registered, so thank you guys for registering already. If you haven't registered yet, good news for you is that for everyone who's attending this showcase, you are going to get the special offer of $199, regularly $249. So that link is going to give you the discounted price. You're not going to see that on the website. You're not going to see it posted online anywhere. So make sure that you use the link in the chat, since that's going to be the one specifically for you guys attending this showcase. It's going to be next week, April 22nd, 23rd, and 24th. You guys were able to see how you could draw on the screen, and that's going to be what we're going to be using during next week's event. I'll have quizzes, walkthroughs, and you'll be able to draw on the screen real time to be able to ask questions, point things out, and I can give you feedback real time. In order to maneuver these markets, we need to be able to learn and implement those three strategies of how do we trade zones, how do we trade breakouts, and how do we trade options. It's not just about choosing one and only trading that one strategy, but it means being able to understand the big picture of the markets and understanding each day what strategy is going to be the best. Is it a zone trade today? Is it an options trade today? Or should I be taking a breakout? And we're going to be putting all those pieces together. So ultimately, when you come out to the markets, you can see the big picture of what's going on and know what trades you should be taking. So step by step, walk through the system for trading in these volatile markets. as a bonus. So for those of you who haven't participated in at least one of the three previous 3-day coaching events, when you use that link in the chat, you'll have your choice of one of the previous 3-day coaching events. I have a description on each one. Based on what I'm seeing, a lot of you guys have been picking the second and third boot camps as your complimentary 3-day event included. So again, when you use the link, you'll get access to the live event next week, and then you get the recordings for the previous event. What I'm encouraging students to do is to go back to those recordings and use it as a refresher to get you prepared for next week's 3-day event. So take a look at these, whichever one you want to choose. Simply send me an email. I'll post my email in the chat. It's going to be tradingcoach@KaitTrade's.com. Send me an email once you register of which 3-day event you would like to have. And then I'll send it to you and use those recordings to review prior to the event. All right. Any questions on what we've covered so far today? Next week's going to be a busy week. Again, we've already had a lot of you guys sign up. It's going to be a jam-packed event, a lot of new information, but ultimately the goal is to simplify these market conditions for you guys. If you have any questions, let me know in the chat. We've got one more minute. I'm happy to answer any questions you guys have. But this upcoming 3-day event is going to be a good one. You get all 3 days, understanding how to trade these markets in a bull market, learn what to expect in these volatile markets using these top trading strategies, and learn the tools to learn how to buy and sell now. And why I said now is because we want to use what's going on real time to trade, not information from the past. So that's something that you still struggle with, or maybe you want to learn how to trade options or take breakout trades. Let me know what you need help with, and I'm more than happy to incorporate it during the event. Hey, Harold. Great question. What's the expected rate of success with our strategies? 70%. Yes, so it should be around 70%. With these strategies, we're picking the top ones and we're using real-time data. So it becomes a much higher rate, I would say 70 to 80%, when we focus in on, again, what's going on real time, and we're choosing the best strategy based on today's market conditions. Then we should be stacking the odds in our favor, choosing our zones, where are we taking a breakout trades. You become more consistent over time. I would say about 70 to 80% is where we want to be when we can implement each of these strategies and learn how to implement them appropriately. Yeah, great question. Looking forward to having you there, Dwayne. Risk to reward. So that's going to be, I typically say it should be based on your trade plan. I encourage students to only risk what they're willing to risk per trade. For me, typically trades, I say $150 to $200 per trade. For the micro contracts, maybe $50. But at least looking for a 3-to-1 move. And risk is keeping it at that dollar value. So I say to students, have a dollar amount in mind. What are you comfortable with risking? And going outside of that, you don't want to do. So if a risk of $300 is too much, well, then maybe we need some work to do on understanding where our zones are and how to identify more accurate zones. So it's less about the risk as it is about what you're comfortable with and being confident with the strategies. But I would say, yeah, it's less about a 3-to-1 or a 2-to-1. I mean, that's what you want to look for as far as profit potential, at least a 3-to-1 move away. As an example, if I come out to the daily time frame, what we'll end up doing is saying, can we stay in a trade for an entire day? So I mentioned S&P at the beginning. We have a green and red candle. That's a 2-candle flip to go short. When price broke below that support, and broke below that low wick, that would be the breakout strategy. So that would be from here, strategy number 2. So breakout trade, as we mentioned, we want to take it after prices return to a zone or when prices just formed a zone. So in this case, we have a 2-candle flip to go short. Breakout trade would be going short below that red candle low wick of 53.91 and ideally staying in it for the remainder of the day. And then you can see what that profit potential is. So I'd say it's more about picking good trades, staying in them for the day, and then you'll see that the reward on that is going to be pretty big when we can keep picking the best trades. So let's see what that would be. Going short below that low wick of 53.91. Price closed that day on that red candle at 52.99. So that's a 92-point move. Who can tell me what's the dollar value per point on the S&P? What's the dollar amount per point on the S&P? Awesome. Thanks, Scott, Jerry, Dwayne. Yeah, $50 per point. So that's a 92-point move. Nice job, Jimmy, at $50 per point. That's a $4,600 move. That would be the goal, picking a $4,600 move, staying in it for the day, and saying, all right, I'm going to take that much. And then my risk is going to be what you're comfortable with. Say $200, $150, keeping our risk small and amplifying our profits based on the strategies that we're taking. And then we want to reassess what's going on based on today's market conditions. So what's going on today? Well, we dropped into a opposing 2-candle flip. We actually just came into this one. So we're rallying a little bit, but I would say that's going to be a kind of a harder trade to go long because of what's happened up here. So when we're looking real time, we're focusing in on the most current price actions to dictate where we're looking to buy and sell in the markets. You can see I'm not looking over here, and I'm not looking down here. I'm just focused in on what's happening real time. And that's going to be some of the best tools that I can teach you is focusing in on what's going on over here so you can take advantage of trades each day. Not necessarily day trading, but more of just picking the best trades to take that are the highest probability. Because if we start looking over here and we start looking too far left, we're going to be trying to take in too much information, and that's going to take away from what we want to be doing in trading the best zones. All right, so I'm going to post the link in the chat one more time. Again, if you've registered already, you guys will get the Zoom links next week. When you register using that link, again, you'll get your choice of one of the 3 previous events. So let me know which event you want to receive in the email to me. Either the first coaching event, the second coaching event, or the bear market bootcamp as a prep for next week's event. Make sure you watch all the recordings and have any questions you have as you come into the event. The event's going to be April 22nd, 23rd, and 24th from 2 p.m. to 4 p.m. Eastern. You will get all recordings in case you can't attend each day for the full time. Special offer again, $199 with the link. You're not going to see that posted anywhere else. I think that's all I got for you guys today. I'm looking forward to having you all there. If you have any other questions as you wrap up the week, just send me an email. Keep in mind, the stock market is closed tomorrow. All right, it's Good Friday tomorrow, so stock market's closed, so there's not going to be a live trading room, and that's why I did want to have this event today. So thank you all for being here and participating, for drawing on the screen, answering questions. Get ready for all of that to be happening next week. Get ready to simplify trading. I know it's complicated and that there's a lot to learn, but my goal in this upcoming event is to simplify it and help you see the price charts more clearly. Thank you all for being here. I'll see you guys next week. Have a great weekend, everyone. Bye-bye. Thanks, Jimmy. Thanks, Harold. Thanks, Michael.